The "For Sale" sign swayed slightly in the breeze, its bold red letters standing out against the faded paint of the house behind it. This wasn't just any house, it was a snapshot of a dream deferred, a promise that had soured. In Fort Lauderdale, homes like this one were sitting on the market for months, gathering dust and disappointment. Nearly 8% of owners here owed more than their homes were worth, trapped in a cycle of hope and heartache. The numbers didn't lie, but they didn't tell the whole story either. Behind every sign, there was a family, a plan, a future that had slipped just out of reach. And this house? It was waiting, just like the rest. The numbers don't lie, insurance costs have shot through the roof. Just a few years ago, families could manage their premiums without breaking a sweat. But now, the graph tells the story. A steep, almost vertical climb, with monthly payments soaring past $2,600. That's not just a bump in the road, it's a full-blown crisis. People are scrambling, budgets are stretched thin, and for many it's becoming impossible to keep up. What used to be a safety net is now a weight dragging them down. And the worst part? There's no sign of it slowing down. Meet the Johnsons, a couple who thought they were making the smart move by selling their home. They'd lived there for years, raised their kids, made memories, but when the market took a turn, so did their plans. What they thought would be a fresh start turned into a financial nightmare. The house sat longer than expected, prices kept dropping, and by the time it sold, they were out tens of thousands of dollars. Then came the fees, the repairs, the unexpected costs. It all added up faster than they could keep track. Now they're left wondering how it all went wrong and what they could have done differently. But they're not alone in this. Far from it. Negative equity happens when the value of your home drops below what you still owe on your mortgage. Imagine you bought a house for $300,000 with a $270,000 loan. If the market shifts and your home is now worth only $250,000, you're underwater, owing more than the house is worth. This is hitting first-time buyers the hardest. Many stretch to afford a down payment during the housing boom, betting on rising prices. But when the market cooled, they got stuck. Now they're left with a mortgage that's bigger than their home's value, making it tough to sell or refinance. It's a risky spot to be in, especially if life throws a curveball. Without equity, options shrink and stress grows. The key? Understanding the risks before you buy, so you're not left holding the bag when the market turns. You're looking at a map of Fort Lauderdale, and right away, two areas stand out. Zip codes 33301 and 33316. These aren't just any neighborhoods, they're the ones where homeowners are feeling the squeeze the most. Over the past year, nearly a quarter of them, up to 22%, have lost their private insurance coverage. That's a huge chunk of people left scrambling for options, and it's changing the way folks here think about protecting their homes. When insurance companies pull out, it doesn't just hit the wallet. It shakes the whole foundation of what it means to own a home in these parts. By mid-2025, nearly every new Citizens policy in Fort Lauderdale comes bundled with a separate flood premium, raising the total cost by $1,000 to $8,000 a year. This shift isn't just a small adjustment. It's a major financial hit for homeowners already feeling the squeeze. And it's not stopping there. Over the next 5 years, experts predict these premiums will keep climbing as flood risks grow and insurers adjust to the new reality. By 2027, we're looking at even higher costs, with some policies jumping another 20% as more data on climate risk rolls in. Fast forward to 2030 and the picture gets clearer. Flood premiums could become standard across most of Florida, not just the coastal hotspots. That means more people paying more just to keep their homes protected. The bottom line, insurance isn't getting cheaper. If anything, it's becoming a bigger piece of the budget, and homeowners need to plan ahead. Whether it's shopping around for better rates or investing in flood mitigation, the time to act is now, before those premiums climb even higher. Public foreclosure auctions have become a fixture of the local real estate calendar in Fort Lauderdale. Every month, crowds gather on the courthouse steps, bidding sheets in hand as properties change ownership in a matter of minutes. The air hums with a mix of urgency and opportunity. Some are here to snag a deal, others just to watch the drama unfold. The auctioneer's voice cuts through the chatter, rapid fire and relentless, as numbers climb and hands shoot up. For some, it's a fresh start. For others, it's the end of a long struggle. But no matter who walks away with the deed, one thing's certain. In this market, nothing stays the same for long. You know, the housing market's been tough lately, but developers are getting creative to draw in buyers. Walk through some of these new neighborhoods, and you'll see fresh paint, modern designs, and open floor plans. All the things people want. But the real game changer? The incentives. We're talking serious perks like $40,000 in closing credits to help with those upfront costs. That's a big chunk of change that can make a real difference for families trying to get into a home. And it's not just about the money up front. Some developers are even offering interest rate buydowns, which can lower your monthly payments and save you thousands over time. It's like they're rolling out the red carpet saying, "Come on in, we'll make it easier for you." These deals aren't just about selling houses, they're about making homeownership feel possible again. So if you've been on the fence, now might be the time to take a closer look. Fort Lauderdale's home price forecast score is just 32 out of 100, indicating a declining market. That's a pretty low number, and it suggests that home values in the area aren't expected to rise anytime soon. If you're thinking about buying or selling, this is something to keep in mind. A score like this usually means prices could drop, so it's worth weighing your options carefully. For buyers, it might be a chance to find a deal, but sellers could face some challenges. Either way, staying informed is key. The latest numbers are in, and they paint a clear picture of what's happening in Fort Lauderdale's housing market. Inventory has climbed by 19%, a significant jump that's giving buyers more options than they've had in a while. But here's the thing. With more homes sitting on the market, the average time to sell has stretched past the 100-day mark. That's a shift from the fast-paced sales we've seen in recent years, and it tells us the market's cooling off just a bit. More choices for buyers, but sellers might need to adjust their expectations. Whether you're stepping into the market for the first time, looking to upgrade your current home, or eyeing investment opportunities, here's what you need to know. For potential home buyers, timing and preparation are everything. Start by getting your finances in order. Check your credit score, save for a down payment, and get pre-approved for a mortgage. Interest rates fluctuate, so keep an eye on trends, but don't wait forever. The right time to buy is when you're financially ready and find a home that fits your needs. Location matters, so think long-term about schools, commutes, and neighborhood growth. Current homeowners, your home is likely your biggest asset. If you're thinking about selling, consider market conditions. Low inventory can drive up prices, but high interest rates might limit buyers. Upgrades like a fresh coat of paint or modernized kitchen can boost value, but don't over-improve for the neighborhood. If you're staying put, refinancing could lower your payments, or tapping into equity might fund renovations or other investments. For real estate investors, diversification is key. Residential rentals can provide steady cash flow, but commercial properties or REITs might offer higher returns with less hands-on work. Research local markets, look for areas with job growth, good schools, and infrastructure development. And always run the numbers. A great deal isn't just about price, it's about cash flow, appreciation potential, and exit strategies. No matter where you stand, staying informed and flexible will help you make the most of your real estate decisions. The market moves fast, but with the right approach, you can turn opportunities into long-term success.